Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look today at a little bit of bounce in the Australian dollar, and it's coming at a time where we're seeing multiple angles to this Aussie piece, but that's also affecting the US dollar as well. So many dynamics within this Aussie USD pair these days. So we're going to take a look at the S&P part of it and the recent Reserve Bank of Australia, their central bank equivalent of the Fed here in the US. They just had a meeting that was a little bit more hawkish than expected. But first, let's take a look at this price action. Plenty of bounce in this Aussie here, gaining back around 40 pips since last night's RBA meeting. And this might not seem like a lot for those currency traders, 40 pips. I see, 100 pip days in the pound or the euro. But keep in mind that this Aussie's so beat up that from a notional standpoint, it's all the way down around 65 cents, that 40 pips is almost a percentage point move in here. So on a percentage basis, this Aussie has been swinging around a lot, and a 40 pip bounce is plenty, and they'll take it given the recent downside pressure on this Aussie here. And so a little bit on the RBA, they did hold rates unchanged, which has been a common theme across every major central bank here to start the year. But their governor did come out and give a little bit of a hawkish tone, saying that they haven't ruled anything out in terms of another hike. Whereas right now, the equivalent here in the U.S. is Jerome Powell saying that they're not devoted to a first cut coming in March or at any upcoming meeting. And that slight nuance there was interpreted as being a little bit more hawkish for the Australian central bank, saying that, hey, we still got hikes on the table, versus, like I say, Powell saying we're looking at cuts maybe a little bit later than expected. And that's led to a little bit of this Aussie strength. But also in this dynamic, and what's been a big piece of the downside pressure has been the Chinese stock market moving lower to pretty historic lows in recent trade. That Chinese stock market has bounced back a little bit this week, and also you can't avoid the fact that the S&P 500 hit another all-time high here this week as well. And you'll remember that the Australian dollar, of the major currencies against USD, is historically the most positively correlated to the stock market at large. But like I say, particularly that Chinese stock market, that's why S&Ps are printing all-time high and Aussie isn't necessarily near all-time highs. But you're seeing a little bit of that Chinese stock, US stock, Aussie correlation lift, those markets rising around the same time here this week. And you would imagine that a continued trend higher for S&Ps, and maybe a nice bounce back. The Chinese stock market trying to act a little bit like S&P or NASDAQ here could help that Aussie along as well, if the central bank themselves don't already help that currency like they have here this week after the RBA meeting. But let's take a look here at the longer run price action in this Aussie, because you do see that there's plenty of room to run, of course, to both directions. But this is a market that's been hit pretty hard here to start the year, falling from what was looking like a trend up to 70 cents, the recent highs for the last year or so of trading. Going into 2024, it looked like that's where they were headed, completely reversed course. Like I said, coinciding with some of that downside in the Chinese economy, and Australia and China very close ties in both their economic activity. And now here, looking like at least a brief turnaround, a little bit of a bounce that could lead this market back to the upside, especially, like I say, if we see continued upside in the US and Chinese stock markets. But on the flip side of that coin, if the S&P turns over a little bit and the Chinese stock market continues to see these headwinds, Aussie could fall down to recent lows around 62, 63 cents. So many different dynamics here on the table with this Australian dollar piece. That's what makes it particularly volatile and particularly intriguing to all the traders out there, is all the different correlations, the pushes and pulls. So we'll continue to monitor not only Australian data, inflation and employment, and if they're going to have stronger than expected data, maybe that could lift that Aussie, or worse than expected data, put some more pressure on it. But we'll also watch the stock movement as well globally for a little bit of tell in this market one way or the other. Let's see where traders are currently positioned on this market. 71% of IG clients with Aussie positions right now on the long side. And so trying to catch a little bit of this falling market, so to speak, a little bit of a contrarian play, not riding the trend lower, but thinking that this could bounce back. Of course, anything can happen here in this market, and we'll definitely stay tapped into that Australian data and the coming stock price action to see where Aussie might be headed next.